From what I noticed so far, people either think that it's super easy to outperform buying and holding Bitcoin and that they can get like 20x per year by trading or investing into small caps or anything similar, or they come from a completely different perspective that you should never sell, that you should never take the profits, and that the BTC price will go up linearly or even exponentially. Both of these are big misconceptions, and in this video I will show you one simple RSI strategy on how you can outperform buying and holding without analyzing charts the whole day or learning some super advanced strategies or indicators. Hello guys, my name is Željko and welcome to Unsymmetry. The more that I watch YouTube videos, read Twitter and other socials, the more I realize how many people have huge misconceptions about Bitcoin, crypto, and their trading and investing capabilities in general. I see so many people posting videos like this strategy will get you $1,000 a day, this strategy will give you 2x your portfolio in a month, and these are even mild in comparison to what else you can find in here on the internet. All these strategies keep things like discussing portfolio size, risk-reward ratio per trade, expected win rate or potential drawdown on your portfolio. When it comes to trading, I see people that are trying to be super analytical and use like 20 different indicators or trying to find the best combination of indicators that will give them an edge in the markets and the highest possible returns. I had similar issues before, to be honest. While on the other side there are people that are initiating trades just based on emotions and being proud of how they got it right without drawing a single line on the charts. Yeah, I agree, it's hard to be objective and disciplined, but if you keep things simple but still do some backtesting on strategy, it becomes so much easier because you know what you can expect in certain markets. For example, you will know conditions will be met based on the rules that you set maybe 2 times per month on average. You will have maybe one winning and one losing trade on average, but on the trade that you won, you will have a 3-to-1 risk-reward ratio, so you will be profitable at the end. These are the things that you should be aware of, but it's more about probabilities than about being right each time. So let's jump on the strategy. So if you're more than a year or two in the crypto, you probably heard of PlanB or 100 trillion USD on Twitter and his stock to flow Bitcoin model, which was highly accurate until the peak of the previous bull market, and probably it will be pretty close during the next bull run as well, with maybe slightly diminished returns. It's maybe the most accurate model that was created that predicts Bitcoin price so far. So, why am I telling you this? Well, PlanB created and backtested this strategy first as well. I think a year or two ago, but it didn't took much traction unfortunately, but I feel that this is so underestimated. Even if you don't use this exact system, it helps you so much with how you should think when you're coming up with your own different strategies and how different strategies behave on different coins, timeframes, etc. So this strategy is based on RSI. I won't explain what is relative strength index in depth, since you can find a lot of articles and videos about it, but the main thing that you should know is that when the RSI for some asset goes above 70, it is considered as overbought and it is expected that the price will retrace soon. When it is below 30, it is considered as oversold, and that usually means that the buyers will come in and the price will start reversing in an uptrend. Still, keep in mind that the asset can remain in an overbought or oversold state for months, sometimes even years. So, PlanB looked into Bitcoin monthly RSI data and created 2 rules. The first rule is pretty much if the RSI was 90 plus in the last 6 months and it decreased to under 65, then sell. And the second one was if the RSI went below 50 in the last 6 months and jumps 2% from the low, then buy, otherwise hold assets. So if you follow these rules, you would have 9 trades so far, pretty much 5 buys and 4 sells, where you would turn $3.5, which was value of 1 Bitcoin in April 2011, to 10 bitcoins or $280,000 based on the current Bitcoin price instead of a 28,000 if you just held that one Bitcoin, which is 10x larger returns. So if you look at the moment when he was looking at a price of 23.3k, that would mean 168% annual returns instead of 119%. So your first buy would be here in April 2011, then you would sell it a bit later during the same year and rebuy at the end of the same year. The second sale would be at the start of the 2014, then the next buy would be in the mid of 2015, then the sell would be at the start of 2018, buy at the start of 2019, and the last sale would be at the start of 2021. In July 2022 we would buy again, and at that moment we would hold 10 bitcoins waiting for the sell rule to trigger, which is still far away from this point. So these returns are sick, especially if you take into account how much effort you take to create a strategy like this and to execute it. It's super simple as well. You're always buying with all USD that you have and selling all BTC with one indicator, trading one coin, no overthinking, with 10x returns in comparison to just buying and holding. And even buying and holding already gave us enormous returns. The reasoning behind the rules for selling at 90% is if we look at the charts, we can see that when we are bullish, RSI for BTC often goes above 90, and sometimes we pull back a bit, and then we have a continuation of a price increase, and that's why we are waiting for it to fall under 65, so we don't sell everything before we actually get to the top. On the other side, when we are bearish, monthly RSI pretty much never goes below 35 to 40 usually, and if it goes 2% up, usually it signals that we had a bottom and that we are in an uptrend. So in the today's scenario, that would mean that we are transitioning to a bull market. So if we switch from a monthly chart to pretty much anything, from like 2 weekly chart, weekly chart, 3-day chart, 1-day chart, one of the first things that we can notice is that the lower time frame that we look into, we can see that the RSI varies much more and it covers wider range as well. On a monthly, it barely reaches 45 to 40 area, while on a weekly sometimes even goes like to 25. So the strategy becomes less accurate the lower time frame that you use, and the odds that you're gonna sell too early without an opportunity to re-enter the markets, it becomes higher. You can see that here, for example, we are still far from the top, or this might even be a better example in the bull run before this one currently. And the opposite applies as well. The chances that the price will continue going down even though it meets the rules is much higher as well. And you can see it, for example, in this area, so pretty much we would buy before we get to this point, for example. So we would need to change rules slightly. We would either need to have like even lower entries for RSI as we see it here, or we can set an increase in RSI criteria bigger, which for example wouldn't work in this case, but it would maybe work at the weekly chart. For example, here we wouldn't like by here, we would wait this area, for example, if we set that we need larger increase than this one. Or we could count the amount of time that it's spent in the certain zone, and same applies for the exits. Anyway, you should always use RSI in confluence with at least one other thing, probably support and resistances, since they're the most important thing to look out for. One interesting thing is if we look at the monthly RSI is that we are creating pretty much lower highs and lower lows when it comes to the RSI, and the higher highs and higher lows when it comes to the price. And it's called a bearish divergence, which is usually a strong bearish signal that could signalize a market crash in the future. Obviously, this is more of an example on how you can think about the markets and how some simple rules can bring you good results. I know some people that look only at 200 daily moving average and they either buy a retest of it or when we are way below it. I just look for crosses of different moving averages like 50-day moving average and 200 daily moving average, 20 and 50 daily moving average, and so on. I just look at time-based capitulation, but pretty much the more you explore and analyze these things, you'll have better insights, what they mean, how to use them, and you will be able to find something that fits your style. RSI in general isn't a thing that should be used alone, as I said, since we can stay in the overbought or oversold territory for a long time on lower time frames, but it definitely helps to highlight a good potential buy zones, for example. Also, PlanB showed us with this that the trading rules don't need to be in the confluence of 10 different things, and just by following some simple stuff you can achieve great results. So strategy and patience play a great role here. Also, many people are trying new things on 15 minutes or even a 1 minute chart, but at these time frames you will have way more deviations in markets, especially crypto, and especially if you're trading smaller caps, and it is much harder to predict the markets, especially in a macro environment as we are currently experiencing. Anyway, I'm looking forward to hearing your thoughts and what strategies you use. Please consider subscribing since it helps me to push this video to more people. Have a great day and stay strong and healthy. Bye! Have a plan and stick to it. Analyze the markets, create a strategy, backtest it and stick to it. If your emotions take over your strategy, the markets will take over your funds.